So Anton has me standing here holding these $600 bills, and he hasn't told me why. You want to tell me why I'm holding these? Because I'm thinking I might just keep them.
Okay, it's time to give it back.
Okay.
Okay, let me have it.
You want me to count them out?
Yeah.
Okay.
Yeah,
1,
please.
2, 3, 4, 5, 6.
Thank you.
You're welcome.
All right, $600. For most of you out there, it's not a life-changing amount of money. But IRS's new rule, it could be. Let's talk about that. All right, so look, in a nutshell, the new rule with IRS and this $600 threshold for people who receive payments through third-party processors, payment processors like Zelle, Venmo-CashApp, there's a few others. Now, if you receive more than $600 in any given year, that total amount received through that processor is going to be reported to the Internal Revenue Service. Didn't happen before. It's going to start happening now beginning 2022. But a big distinction I want everyone to know is that this isn't a tax change, it's a tax reporting change. And this is why it really matters. Let's do it. All right, and why that distinction matters, for those who receive more than $600 in an account, yes, those processors, Venmo, CashApp, Zelle, they will report the amounts received in any given year to the IRS. That doesn't mean that it's income or that it's reported as income. It's actually only reported as payments from third parties. And that matters. Okay, why it matters, for those of you who are not in business and who receive payments that way, there will be an opportunity on your tax return next year to report that the cash proceeds, the cash that you received, is not business income. It's not income. It's just, sometimes exchange of funds, payments from roommates or a family member. It's not necessarily business income. You will have the opportunity to be able to say that so that it's not treated like taxable income. That matters. All right, but let's talk again about business owners. All right, business owners understand that previously those payments that were reported through those companies or those applications weren't reported to the Internal Revenue Service or to state government. They will be now, which means that you now have an exposed business operation that now must be reported to the IRS. And really that's the purpose of this reporting change anyway. What do you do to protect yourself? 3 things, very simple. First of all, if you receive business income, you sell things, you get paid for services through those applications, make sure that they deposit only to a business bank account that is specific for those funds and specific for the business. You don't mix it with your own personal income. Your own or other personal funds, all right? All right, second thing, all of your business-related expenses, this will help you a lot. All of those business expenses run through the same account. If you purchase goods, you buy them with that account. If you pay your phone bill, if you pay your business rent, if you have transportation costs related to the business, keep them all within that same bank account through which you also receive the income. It'll help you out a lot. It'll help you out a ton for this third part, and this really matters. When you file your tax return, you take that business activity, the income and the expense, and the net of those will give you what's called a profit and loss. But that's what you report on your tax return. Now remember, your business is going to be exposed either way. You may as well get credit for the payments that you've made supporting your business, your cost of doing business, and then make the accurate representation, because if you don't, well, then that's a bigger problem. But now you know what to do. Protect yourself. Hey, I'm Anton. Thanks a lot for joining us. Please subscribe, like the video, subscribe. We'd love to have you. And we'll see you next video. Thanks a lot.